Hello traders, Gary Wagner here, approximately 11:40 in Honolulu, 4:40 in New York on Monday, 20th day of December 2021, and this is the daily report for gold and silver. The precious metals complex had moderate to strong declines today, with gold giving up about 0.8%, a total of $15 in terms of the decline today, taking gold futures basis the most active February contract to $1,789.90. The strongest decline in the precious metals complex today was palladium, giving up $41.30, a net decline of 2.31%, taking palladium futures to $1,743.50. Platinum gave up about $6.30, or approximately a 0.7% decline, coming in at $928.20. And lastly, silver experienced modest declines compared to palladium, but greater than gold, giving up about 1.2%, a decline of approximately 27 cents, putting silver futures at $22.26.5. And that was with a fairly neutral dollar today. The dollar index gave up 0.05% and is currently fixed at 96.50. Gold futures absolutely traded under pressure today, declining by $15. What is interesting is that when we look at the intraday high that occurred on Friday, which is what I'm pegging major resistance at now, of $815, we can see two other occasions, one that occurred in the middle of November, as well as one that occurred towards the end of October, in which gold traded to an intraday high of that level, but closed well below it on every occasion. That was followed by today's open that came in at an interesting price point, right around $1,800 per ounce. You can see that as the open right here. However, it's the high that I find most interesting because it matches up almost exactly with the 61.8% Fibonacci retracement from this short data set that begins at the conclusion of the November FOMC meeting on the 3rd and goes up to November 16th's intraday high at approximately $1,879. We saw the market trade under pressure, and right now we see support at three different levels. The first level that you would want to watch is this level that's created by the support level from the compression triangle that we identified a couple of months ago. Because the first level of technical support occurs from a compression triangle lower level support line, as seen right here, that support line is an ascending support line that will get higher as we go through time. It is currently fixed at $1,786 per ounce. Below that, our next level that we're looking at for support comes in based on a 78% retracement level, and that comes in at $1,783. Currently pegging our major support level about $20 from current pricing at $1,770 per ounce. That particular price point is based upon a Fibonacci retracement level of 38% and comes in at $1,770.30. We do have a defined series of bottoms that occurred at the beginning of December that support that as a major level of price support. The last thing I do want to speak about in regards to gold is recently we have been speaking about the possible similarities between the December FOMC meeting and the November FOMC meeting. These similarities seem to be fading at this point because whereas we saw a straight ascent, that was our November rally that started with the lows of the 3rd and concluded on the 16th of November at the high of $1,878. We're seeing that on this particular round, we had a low that occurred. It was just slightly above the low that occurred in the November. We had a solid performance day following the Federal Reserve meeting. But then we had the shooting star that came in on Friday, in which we went to current major resistance at 1815 and then declined today fairly substantially, as we spoke about $15. Although palladium did have respectable gains on Thursday and Friday of last week, it did trade lower significantly, almost 2.5%. And when we look at the big picture as far as palladium is concerned, we have seen palladium decline from approximately $3,000 per ounce down to these lows that come in roughly at $1,500. Currently, palladium is sitting at approximately $1,743. And the last metal that we do want to look at today is silver. Silver had a moderate to strong decline, giving up 1.12%, or about 25 cents. You've got an ounce currently fixed at $22.28 after factoring in today's 25-cent decline. We noted on Friday's show that on our weekly chart we saw a hammer, but on our daily chart we had this doji. We favored the weekly chart for a long-term trend, but the doji seemed to point out more accurately what we saw today in silver, which was a solid decline of over a full percent. That being said, if we get a continuation and tomorrow's candle is a long red candle, we would have a variation of a three-river evening star. We currently show strong support at approximately $21.50 and resistance at $23.11 per ounce. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.